Stop everything you are doing right now. Close every other tab on your browser and put down whatever is in your hands. What happened in the last 12 hours while you were sleeping is the single most important event in the precious metals markets in over a decade. If you do not understand what just transpired overnight, or if you miss the significance of what China just did to the Western banking system, you are about to be left behind. We are witnessing the fastest moving wealth transfer in modern financial history. It is Tuesday, January 6, 2026. This is the date you will remember for the rest of your life. It is the day the silver market finally broke, the day China took total control, and the day the United States banking system raised the white flag in surrender. Let me show you exactly how this unfolded. Yesterday, Monday, January 5th, the New York trading session closed with silver sitting at approximately $75 per ounce. We just witnessed an incredible rally driven by the Venezuela crisis, geopolitical chaos, and a massive safe haven bid. The Western traders went home and the COMEX closed for the day. The U.S. banks thought they had survived another session. They thought they could regroup, strategize, and perhaps mount a defense on Tuesday morning, but they forgot one critical reality. They forgot that when New York sleeps, Shanghai wakes up. They forgot that the financial center of gravity has shifted east. They forgot that they are no longer fighting retail investors or small-scale hedge funds. They are fighting the industrial engine of the world's second-largest economy. Last night, while the American banking system was dark and silent, China launched an assault so massive and coordinated that it has fundamentally changed the balance of power in the silver market forever. The Asian trading session opened with silver at $75. Within hours, it climbed to $76, then $77, and continued its relentless march upward. By the time Shanghai closed this morning, silver was trading at $79 per ounce. That is a $4 move in a single overnight session. The volume behind this move can only be described as historic. We are not talking about millions of dollars flowing into the market. We are talking about billions, multiple billions. This is the kind of capital deployment that only happens when a nation-state decides a strategic resource is too important to leave in the hands of its competitors. To put this in perspective, a $4 move in silver in one session represents a gain of over 5%. In the normally staid and boring world of precious metals, that is an absolute earthquake. That is usually a once-in-a-decade event. Except we just had one yesterday with the move from $71 to $75, and now we have seen another one overnight. Two massive spikes in just 48 hours. This is not normal price action, and it is certainly not mere speculation. This is not technical trading. This is economic war, and China just showed up with the nuclear option. The data coming out of Shanghai this morning is absolutely staggering. Order flow analysis shows that approximately $8 to $10 billion in capital hit the silver market during the Asian session. Imagine $10 billion chasing a market that only produces about $2 billion worth of silver per year globally. Think about the mathematics of what I just said. China tried to buy nearly half of the world's annual silver production in a single trading session. That level of buying pressure is not a trade or a bet, it is a takeover. It is a nation saying they do not care about the price, the charts, or the resistance levels. They are taking the metal, all of it. They are telling the West they can either sell it now or sell it at twice the price tomorrow. The U.S. banks saw this happening in real time. Their overnight trading desks were active, monitoring the Asian session and watching the volume explode. They saw the relentless mechanical buying, and they made a decision that tells you everything you need to know about who is winning this war. They stopped selling. The banks that have spent decades suppressing the silver price through coordinated shorting and capping every breakout have finally stepped aside. They pulled their sell orders because they realized they cannot win against this kind of force. When you are fighting retail investors, you can win by manipulating margin requirements or issuing bearish research notes. You can dump futures contracts at strategic moments to play psychological games. You can outlast retail because they have limited capital and limited patience. But when you are fighting the Chinese government and the industrial complex that powers the world's manufacturing base, the rules change. When you are fighting sovereign wealth with access to trillions in foreign exchange reserves, you cannot outlast them. You cannot manipulate them. You can only get out of the way or get run over, and the U.S. banks chose to get out of the way. Sources on institutional trading desks are confirming that major bullion banks like JP Morgan and HSBC have lost hundreds of millions of dollars in the last 48 hours. Their short positions established at $50, $60, and $65 per ounce are now deeply underwater at $79. The losses are compounding every hour the price stays elevated, but more importantly than the money, they have lost control of the narrative and the market itself. For decades, the COMEX in New York was the price setter for global silver. London, Tokyo, and Shanghai all followed New York's lead. That era ended last night. Shanghai is now setting the price. Shanghai determined that silver is worth $79, and when New York opens this morning, traders will have to accept that price or watch every ounce of physical silver in the U.S. be drained and shipped to China. The arbitrage spread has now widened to over $4 per ounce. When New York closed at $75, Shanghai was already at $79. On a commodity that trades in 1,000-ounce bars, that is a $4,000 risk-free profit per bar for anyone who can move metal from New York to Shanghai. Traders are doing exactly that right now. They are calling every dealer in the country, offering premium prices for immediate delivery, and chartering private jets to fly silver bars across the Pacific. They are draining the COMEX vaults and buying up every silver eagle and maple leaf they can find. At a $4 arbitrage, you can afford massive premiums and rush shipping because you are still making money. This arbitrage machine is acting like a vacuum cleaner, sucking physical silver out of the United States at an unsustainable rate. The COMEX registered inventory dropped another 1 million ounces yesterday alone. At this rate, the registered category will be empty by the end of January. We are talking about 3 weeks, not months. When that inventory hits zero, the exchange will have to declare force majeure. They will have to admit they cannot fulfill delivery requests and must settle contracts in cash. When the world's primary price discovery mechanism admits it doesn't have the metal to back its paper, confidence will evaporate instantly. The paper price will become meaningless, and the only price that will matter is the physical price controlled by China. Some people think the banks will just short the market again to drive the price down. That has been their playbook. For years, smash the price, scare the longs, and buy back shorts at a lower price. But that strategy is dead because when banks try to sell futures to suppress the price, China just buys every single one of them instantly. The Chinese buyers don't care about RSI, MACD, or Fibonacci levels. They want the ounces. If the banks sell, China will demand delivery, and the banks will either deliver or default. They are trapped in a no-win scenario. This is why many banks are already covering their shorts, taking massive losses at $77 and $78 because the alternative of staying short while silver goes to $150 is total bankruptcy. Their forced buying is only adding more fuel to this historic rally. If you look at the charts, the visual is striking. We broke through the $75 resistance level, which was a massive win for the bulls. But the Asian session didn't just hold those gains, it went nearly vertical. This is what a short squeeze looks like in slow motion. The volume was up 500 to 600% compared to a typical session. That is the smoking gun of institutional and sovereign wealth. When U.S. traders log in today, they are going to panic because they realize they are no longer in control. If they are smart, they will gap the price up to match Shanghai at $79 or higher. If they are stubborn and try to open at $75, arbitrage bots will eat them alive and the COMEX will be empty in days. Right now, demand is overwhelming supply by a factor of 10 to 1. Global mine production is about 15 million ounces per week. China tried to buy 125 million ounces last night alone. The price has to rise until demand is rationed. Mathematically, the price would need to hit $650 per ounce just to balance that single night of Chinese buying against weekly production. While I am not saying we hit $650 this week, it shows that $79 is still a massive bargain. China knows this, which is why they are front-running the shortage. They want to secure their hoard before the arbitrage window closes, and global export controls are implemented. You might be wondering if you should take profits after a move from $71 to $79. If you are trading with leverage or options, yes, you should de-risk because volatility will be insane. We could see violent pullbacks of $5 or $10 as banks hunt for stop losses. But if you are holding physical silver, do not even think about selling. We are not even in the euphoria phase yet. The mainstream media isn't talking about this, and your neighbors haven't noticed. This is still smart money and institutional accumulation. The gold to silver ratio is currently around 36 to 1. In a true bull market, that ratio compresses to 20 to 1 or even 15 to 1. Silver has a massive amount of room to run relative to gold. Be prepared for a liquidity grab where the price is slammed down briefly to trigger stop losses below $75. The market makers want those $2 billion in stop-loss orders. When that happens, the media will scream that the rally is over, but it is just a trap. China will buy that dip instantly, and the rally will continue without those who got scared out. The next major target is the all-time high of $84. If we break that on high volume, we enter blue sky price discovery mode with nothing standing between us and $100. Gold and platinum are also moving, confirming this is a broad monetary crisis and an inflationary boom. This time is different because it isn't driven by Reddit, it's driven by a nation-state with a 50-year plan. The US cannot stop this because they don't have the silver to flood the market, and export controls would only signal total defeat. This is the unipolar moment ending and the transition to a world where hard assets matter more than paper. If you don't own physical silver, fix that immediately. Pay the premium because it won't matter when silver is at $150. If you have paper ETFs, understand the risk of cash settlement and try to move into physical as soon as possible. Ignore the noise and the bearish analysts. The old rules of technical analysis do not apply when a nation-state is taking over a market. Wait for the gold to silver ratio to hit 30-1 or 20-1 before you even consider swapping your silver for gold. This is your once-in-a-lifetime opportunity to be on the right side of a massive wealth transfer. The war is here, the silver market is broken, and China is in control. The question is, are you positioned correctly, or are you holding on to paper promises? The train is leaving the station. Don't blink.